The broadcast is now starting. All attendees are in listen-only mode.
Hi, my name is Beverly Bolnick, Vice President of Sales and Marketing at NMP, and I would like to welcome you to National Mortgage Professional Magazine's webinar titled Brokers Gaining Market Share Again, 2015 is the Beginning of Broker Resurgence, sponsored and presented by United Wholesale Mortgage. I would like to thank all of our webinar attendees for taking the time out of their busy days for this very valuable and informative webinar in our ongoing series of webinars. Today's webinar will be conducted by Matt Ishbia, CEO, President of United Wholesale Mortgage. Matt has evolved United Wholesale Mortgage into one of the nation's leading wholesale lenders, and he has been recognized nationally for his innovative approach to lending and for UWM's support of broker and correspondent growth. UWM's focus on providing exclusive technology, unique products, and exceptional service solidifies their commitment to partnering with each and every client. If you have questions during the webinar, please be sure to send them to questions@uwm.com, and we'll try to answer as many questions as possible at the end of the webinar. If we don't get to your question, we'll make sure that someone from UWM gets back to you to answer it. Also, we'll be sending out the PowerPoint presentation and a link to the recording of the webinar to all webinar registrants tomorrow for your future reference. Without any further ado, I'd like to turn things over to Matt Ishbia.
All right, thanks Beverly and the National Mortgage Professional. We're excited for this webinar, and this webinar is something I'm passionate about, and I think a lot of people on this call probably are as well. So I'm going to go into some of the things, and we'll hopefully make it very informative and impactful, and hopefully less than 60 minutes, and hopefully everyone walks away with some good information. So first, the webinar agenda, the 5 main topics along with the Q&A. I'm not going to read these to you, but kind of give you some of the information about what's going on. There's obviously regulation changes that are happening, and for once they're actually favoring the brokers. We're going to talk about some of those things, how you know, perceptions of brokers are changing on Wall Street, how the last couple quarters have looked, and some different things happening in the broker world. So we're going to get right into it and talk about it. Like Beverly said, email questions@uwm.com. We're going to take a handful of questions at the end, hopefully answer as many as we can, and if we don't get them all taken care of, we will make sure we respond to you within the next couple days at the latest. So jumping right into it, you know, wholesale brokers are making a comeback. You know, a lot of things changed from where it was years ago to where it is today. Right now, a lot of people don't know, but the mortgage broker market is, as of the end of last year, now at 10% of the overall market. So it's some of its lowest points of all time. This next slide kind of shows you a little bit about where it's been. So, you know, 2007, it was up in 30% range, and before that, it was even higher. So the mortgage broker business has been on a steady decline for the last couple years. Some people say, why? Well, why are the brokers, what's happening? Well, let me give you the reasons why. Uncertainty in the market, you know, fear of, you know, fear leads to people going to secure places. When no one knew what was happening with the mortgage brokers or what they deemed happening with regulation, people would run to the Chases, the Wellses, the large banks to, you know, be protected, and that's understandable because, you know, uncertainty provides, you know, you got to take care of your family, so a lot of people went scattering to the larger lenders. Also, you know, recruiting tactics, sky is falling. I mean, every time I heard QM has ended the brokers, or the new GFE was ended the brokers, and everything's ended the brokers, and that's really a lot of times a recruiting tactic for people that are growing their retail business, obviously, which I understand, and, you know, can't argue. And then there's guys out there, and you guys know, you know, people like to blame a lot of the 2007 or 8, the mortgage crisis, on the brokers, where everyone in the industry, everyone on this call obviously knows that's not the case. You know, when guys like Jamie Dimon from Chase are pointing their fingers at brokers and saying, these guys did all these loans, and we didn't know anything about it, when you know, and we all know that the lenders were the ones that designed the product, the brokers were the ones sending the loans in that met the criteria, and, you know, it's obviously when you have when you're a big, large lender like some of those other ones, it's easy to point their finger at the brokers and act like they weren't a part of it. So brokers were the scapegoat, and a lot of people try to push them that way. And then a lot of the regulations supposedly were targeted at brokers, and that were, you know, making it so it was harder for brokers to compete. And then so it was really a self-fulfilling prophecy for these large lenders, because they said, great, well, we'll have more retail originators, and we'll grow our retail business, and, you know, to heck with all those guys. And that's kind of really what happened. And sadly, they were able to do that. But now the positive is that's flipping around. And the reality of it, which we'll talk about in a minute, is that's not the way it should have went, and that's not the way it should go going forward. And the fourth quarter of this last year, it's starting to trend in the way that we would like. So let me show you a slide. fourth quarter of last year, from third quarter to fourth quarter, the market share change, the correspondent, which is mostly retail players, and then the retail, which is a lot of times the big banks, both went down from third quarter to fourth quarter. They did less business. Brokers was the only channel that grew in the fourth quarter. We see it growing again in the first quarter, second quarter, and beyond this year. So it's really interesting to see as those larger lenders. So why would that happen? Why is brokers? Well, first off, more people are joining broker shops, which I'm going to show you in a little bit. But also, brokers are more nimble. When the rates drop, brokers are able to take advantage of it. When brokers are able to do more purchases because they're in the communities and they're able to do a better job than a lot of the large retail lenders. So the broker business is actually getting stronger while the rest of the market maybe is staying flat or maybe getting a little bit better. But this shows that the fourth quarter versus the third quarter, the broker was the only channel to grow. So it's important that you realize that, you know, although we feel it's busy and you guys know it's busy, in comparison, like these large banks and these large retail institutions, you know, remember they were doing all these HARP loans. They had thousands of originators that they laid off in 2013 after the rates went up, and even in 2014. So even though they're doing a lot of business, they're not able to do the volumes that they were doing before, which is a great opportunity for us brokers and us small originators to take market share. This is another slide I like to show. Look at the mortgage brokers volume over the last 3-4 quarters. So it's growing substantially. First quarter, second quarter, third, I mean, it's almost a 50% growth from the first quarter to the fourth quarter. And we think first quarter this year, once again, will be higher again, and it will continue on this pace. So, you know, in the overall scheme of things, it's still not that much business, right? It's only 9-10% of the overall market. But imagine when more of it when it turns into 11, 12, 15% of the overall business is mortgage brokers. It's going to really be a game changer for everyone here, because it's going to become more of a thing that more borrowers start thinking about brokers, and I actually have a slide about that, and more people start thinking, gosh, why am I at a bank or credit union? I should be going back to working at a broker shop where there's more flexibility, more options, which we'll discuss. So it's interesting to see the market shifting, and so I wanted you guys to get a perspective of that. And then the next slide talks a little bit about one of the big ones, which is 20% of all purchases being done by brokers. Well, guess what? Obviously, no one predicts the rates to drop every single time or gets it right all the time, but we all assume that being big in purchase is always an important thing for the market all the time. And for brokers to be doing 20% of the purchase business is really an important thing. So what's driving that, you know? Well, first off, you know, I actually read an article today before this webinar about how real estate agents feel more comfortable sending their loans to mortgage brokers or the local community banks than they do the big box retailers because of closing times and communication and feeling that they're important rather than just one of thousands and thousands of loans. So mortgage brokers do get a bigger percentage of the purchase business. Also, brokers are more able to offer different products, so, you know, which we'll talk about in a couple of minutes. But why did someone not send loans to brokers? Because they always assume that the retail lender could close the loan, you know, instantaneously for them. Well, that's not the case. Brokers have the most flexibility, the most ability, because think about this. If you're a retail lender and I'm sending a loan to, I work at a retail shop, well, if my turn times are backed up or my closing department's backed up, that's it. That's all I got. Well, if I'm a broker, I have options to go to whatever wholesale lender's got the best opportunity, the best turn times, the best availability at that given time. So it gives you more flexibility, and I think real estate agents, they care about one thing, which is the closing date, hitting that closing date on the purchase contract and being done with it, taking care of the client. And mortgage brokers are able to deliver that more often than retail lenders. So I'm going to go into a couple facts. This is something that's important, and then we'll get into some other details. But the first is this. You know, multiple lenders, the facts are the best place for a borrower to go, a borrower, is a mortgage broker. And the other fact is the best place for a loan officer to be is at a mortgage broker. Let me give you the why behind both of them. The first off is, as a borrower, the mortgage broker's job is to shop for you, whether it's price is important to you, whether turn times, whether service, whatever your needs are. The mortgage broker's job is to be the expert for you and find the best option. And they have more flexibility, more products, and that's a fact. It's not an opinion, because let me give you if I'm a retail lender, and I'll use a competitor, Flagstar, a very good competitor, they do a nice job. If I'm a retail person at Flagstar, I have all Flagstar's products. That's great. Well, no matter what, if Flagstar is the best product for that borrower, well, all wholesale brokers have access to that product as well. But the best part is the wholesale broker also has access to United Wholesale and Freedom and Stearns or Franklin American or whoever else is out there. So you can always find the best option. So there's never a situation where the borrower couldn't get as good of a deal with a broker as he can with a bank. Now, you can say, well, sometimes banks have portfolio loans and some portfolio products, and maybe I could argue that you could maybe find it, but I'd also push back and say a lot more of those portfolio programs, doctor programs, these odd investor programs are coming back and are available in wholesale lenders. So there might be a couple one-offs, but 99% of the loans, the borrowers are better going to a broker shop who can shop for them and find the right place. Now, same thing with the originator, a loan officer. Why would I be a retail originator for a place like whether it's Flagstar, it doesn't matter, any retail lender out there in the country, when I could go and be a wholesale broker and have access to those same retail players that are very good in a lot of respects, but I actually have access to their wholesale products, which usually wholesale products are better priced and have more flexibility than the retail products. So just know that there's always a better option for the borrower to go with a broker, and it's always better for a loan officer to be a broker shop. And it's not an opinion. You know, as I talk about multiple lenders and products, faster turn times, and you can say, well, my turn times are really fast at my retail place. Well, guess what? If there's 100 wholesale lenders or 200 wholesale lenders, I promise you there's a wholesale lender out there that's faster. And so having more options is better than less options. And and same thing with pricing. My pricing is really good. Well, there's always someone out there that has just as good, if not better, pricing. So having more options is what an originator wants, and same thing with what a borrower wants. So that's the hypothesis behind that. The broker business is going to grow. Once the regulation is behind us, where there's not any changes that are going to disrupt the mortgage broker opportunity, the truth is the CFPB is trying to do things such as make it so that the borrowers get the best options and take care of the borrowers in the best way. And that's really what mortgage brokers do. And that's why we see that the mortgage broker business is going to continue to grow, and more loan officers are going to go to mortgage brokers, and more borrowers are going to go to mortgage brokers, and that trend is starting to happen right now. And we're excited about it because we believe in doing what's best by the consumer, and I think that the mortgage broker is the way to go. Now, I see some questions coming in. I'm going to answer the questions all at the end so I don't get off path, and we can kind of go through these slides. But, you know, please feel free to keep emailing them at questions@uwm.com, and I will handle them all together at the end. So taking back market share, here's the other one I've seen a lot of, and I want to talk about this one because we've actually been helpful to some people. It's people starting their own broker shops. It used to be, gosh, you know, it's so much work to start my own broker shops. How do I get the net worth requirements? How do I go get my FHA approvals? I got to have a certain. It's not like that anymore. We actually have a thing we call broker in a box, which is basically a simple way to get a broker approved, a loan officer approved, and start his own broker shop. There's some steps you have to take. You obviously got to make sure you're licensed. You got to get your broker shop license. Got to get your website. You know, there's things to do, but there's ways to do it. And we've seen some. We've actually personally helped some here at UWM start their own broker shop, leaving a retail lender and someone that used to be his own broker and they wanted to come back in the business, set them up with good contract processors. You could really get this thing started and do great things. There's a story of one that started about 4 or 5 months ago, and this guy went out there, started a little mortgage broker shop after leaving a retail lender. It's closing 6, 7 loans a month right now, all by himself with a contract processor, making more money, being more successful than he's ever been before, but he just didn't know it was out there and didn't know how easy it was to get done. So, you know, you really can get this thing done in 60 days or less, depending on what state you're in and what the process is. And we've seen a lot of people have success. And some people say, oh, well, wholesale lenders won't approve you if you don't have X years of experience. Yes, they will. They'll approve you if you have X years of experience and it's not your first day in the business. I'm not saying, hey, you've never been in the mortgage business, go start a broker shop. I'm saying, hey, you've originated loans for a couple of years and you want to start your own business, be an entrepreneur. We're supportive of that, and so is almost all wholesale lenders. And if they're not, then that's probably not a good fit anyways. Here's a couple stats for you. Mortgage broker shops opening in these states, up 10%, 10.5%, 7%, 5%. It's going up. So just know that if you're not doing it, that's okay, because it's not for everyone, but there's more and more people doing it, and we're excited about that. We're happy to help as always. The other thing is, this is how many more originators are becoming approved. So why this is important, I'll talk about it a little bit later about versus the credit unions and banks and how the licensing works, but in general, more and more loan officers are joining and are becoming approved in these states, and all states really, but these are the 5 states we picked. And so just realize that that's a lot of new originators, people out there originating. And some of them used to be at banks that came back and now they have to get licensed, and some of them are getting into the business or whatever it may have been, or expanding their state licenses. So there's a lot of opportunity, and there's more and more people joining these states and joining the broker world and the origination world in general. So it's important for you to know these things and to know that it's a growing market. It's going to continue to grow because it's the best place for consumers and originators. And there aren't too many markets out there in America that it's always best to go for the salesperson and the consumer. And this is a great example of it is. So it's going to grow, and that's why it was 40-50% years and years ago, and 30% in 2007, because it always made most sense. Why has it changed? It hasn't changed. It's just got to get back to it. So let's talk about this. This is something that's important. As we're growing, as we as mortgage brokers are growing, making sure you're working with lenders that are helping you grow and not hurting you. 30% share in 2007, and it was higher before that. What was different then than there is now? Well, let me tell you one thing. All the wholesale lenders, and we were in the business back then, we were smaller at UWM back then, but all the brokers, all the wholesale lenders had services and did things to take care of their brokers, help their brokers grow, because they knew that 40%, 50% of the mortgage market was brokers. They did all these things to help brokers do more and do better, and they didn't dare try to steal one of their loans from them. You didn't cross your mind, because that's where your butter's your bread's buttered right there from the brokers. Why would you do that? So they had all these great services for brokers. They used to do different things to help the brokers grow. They used to do webinars like this or real estate shows to try to help them grow their business. They used to do all these things. That's what wholesale lenders were there to do. And now it has changed. And so now the reverse happens, where they compete. They say, oh, yeah, thanks for the loan, and now we're going to have our retail division compete with you, or we're going to compete with you. Oh, yeah, well, if you don't want to be a broker, why don't you come join our retail? They're competing with you rather than helping you grow, and that's a big difference maker. And it's not just UWM. There's a lot of wholesale lenders that are supportive, and we're going to talk about that. But in general, I want you to realize that that's the big difference. Why can't we get to 30% again? Because we're allowing that to happen, So as mortgage brokers, many wholesale lenders are using you to grow their own retail channel, and we can insist as mortgage brokers, insist that they don't do that, right? And so we're real big, it's real prevalent right now as rates dropped, obviously, in January. Everyone has lost a loan to a wholesale lender that has taken their deal, and that's crazy. We have to insist that that's not acceptable, that wholesale loans are wholesale brokers' loans. Now, if the broker goes out of business or something happens, that's different. But competing with our brokers is not what we want in the industry, because it doesn't help anyone. All it does is help the retail lender at the end of the day, or the end buyer, which is not what we want to do. So, the one thing I'd like to share about this is I want to make sure. I get some people that say, hey, well, yeah, I know that some competitors steal our brokers' loans, but I can still send them loans because I have a great relationship with my borrowers. My borrowers aren't going to leave me. Okay, that's great. That's great that we think that, but let me just say that, and that's probably true. But I want to give you the math behind some of this. When a lender, United Wholesale as one of them, when a lender does a loan, they value the servicing or that loan with a servicing asset after the loan's closed, and they have a certain, let's just make up a number, let's call it 80 basis points, okay? There's 80 basis points of money there that if that loan pays off in 6 months or 9 months, that they basically lose, because they're expecting it to get paid 25 basis points a year for a little bit over 3 years based on that 80 basis point number. If that loan pays off in a year, they basically forfeit the rest of the future income. So what I want to explain to people is that although you can get that loan back and you have a great relationship, these retail lenders or these wholesale lenders that are competing with you, their portfolio retention department can always do it cheaper, because it's either, do we want to lose 80 basis points or do I want to lose 50 basis points? Because I'll lose 50 rather than I lose 80. So they'll do it cheaper and basically do it for free. So it's almost impossible to compete if they really want to keep the loan. So why even go through this? Why is it a race to the bottom? Hey, if the borrower wants to refinance, have the broker deal with it. Have them bring it back to the wholesale lender. Build that. That's what we used to do, and that's how business used to be done. We do that today at UWM, which I'll talk about in a minute. But it's important that we as brokers, to help us grow and help brokers grow, is make sure we're working with lenders that have your back and support, because everyone has a story of a wholesale lender taking your client, and we got to stop accepting that. We got to insist that that's not how it's done. So some people say, well, okay, well, put your money where your mouth is, and that's what we did. And I want to tell you a little bit about this program just so that you guys know at UWM we do this, but maybe there's some other lenders that are doing this, or if they're not, hopefully this will be the beginning of them doing this for you. Is every time a loan closes, a wholesale lender, retail lender, any lender, they monitor that borrower's credit. If I'm servicing him, I'm monitoring his credit. And if he gets his credit pulled by any for a mortgage, I'm getting notified. If I'm a place that competes with brokers, I send it to my portfolio retention. We do whatever we got to do to keep that loan with us because I don't want to lose the 80 basis points that I talked about a minute ago. If I'm a UWM, what we do is we send a letter to the borrower and say, hey, we saw you pulled your credit. Don't forget to call John Smith at ABC Mortgage. He's the one that did your mortgage the first time. Hopefully you can go through him, and then what we do is we call John Smith and then email John Smith an email that says, hey, Sarah Smith or whatever her name is, the borrower just got her credit pulled. She might be in the mortgage market right now. Please call them and bring it back to UWM, and let's keep this loan in our family if the broker can do it, and UWM. So we call it UConnect. You know, we give the business back to you rather than to our retail team. Now, some people say, that sounds great. Why don't all wholesale lenders do it? Well, because the truth is, a lot of wholesale lenders think that they already bought the loan once. I don't have to buy it again from this broker. They're my client, and that's not how we look at it, and that's not how I think it should be looked at. Second thing is this is very expensive to do because not all these loans come back to UWM, as you can imagine. Most of them do because most brokers will appreciate the loyalty that we've taken care of, but sometimes we can't get those loans back. So most people I talk to, you know, in the executive levels, they tell me that this is crazy and that I should stop doing this because this isn't good for the industry. And I think that it is great for the industry because we're helping brokers. We're helping brokers be successful, and it's not about stealing the business. It's about being partners. And if we do a good enough job at serving our brokers, they'll send the loans back to us, and that's how we think about it. So just realize that that's a big part of what we believe in, and we as brokers and people out in the market can insist upon this type of actions from our lenders if we stay strong to, hey, I don't care if they're offering me an extra 2 basis points or 10 basis points. The long-term benefit is I want to have a partner that's not going to take my client. And then the other thing is, by the way, here's a stat for someone, which I'll tell you, which ties into the next slide a little bit, is did a poll of loan borrowers about their mortgage broker experience. 90% of them, 90% of all borrowers said that they had a great experience or good enough experience that they would go back and use that loan officer they closed a loan with again. They liked them. That's great. But only 10% remembered their person's name. So, or remembered who it was, because it was 2 years ago. I don't remember who that loan officer at John Smith at ABC Mortgage, I forget who it was. And, oh, my new lender called me. Great, I guess I'll just work with them. This protects you at all times. We're helping you market on the back end to protect your business. So, is your lender working for you or are you working for your lender? I'm going to go through this stuff real quick because this is just examples, and these are things that we do at UWM, but other lenders do similar things, and if they're not doing them, all I want to do is say, we should insist upon it. We as mortgage brokers should insist upon it. Grand Slam Success Plan is a whole process of how we help loan officers work with real estate agents. How do you get business from real estate agents? It's a whole process. It's all free, all labeled. And one other thing, all these tools I'm telling you about right here for UWM and also hopefully for other lenders is that they only have the broker's name and information. There's nothing about UWM in it because it's not about growing UWM. It's about growing the brokers. And if the brokers grow, we know UWM will grow too as long as we do a good job in giving you great service. So this is all non-UWM stuff. Nothing says UWM on it. The Marketing Center is basically a place where you can go and print free flyers with your name and picture on it for realtors, for title companies, for borrowers. All free, all with your name and information on it, all designed by our 20-person marketing team here that does an amazing job. It's all free. So make sure that you're getting, this is free marketing. This is helping you grow your business. UTrack is a tool that you can give to a borrower or a realtor with all your information on it. Doesn't have anything to do with UW on it. It's like a FedEx tracking system. What's going on with the loan? It's approved with conditions. The appraisal's been cleared. All the closing docs have been sent out. It's like a FedEx tracking package that you can give to your borrowers and realtors. We've had some huge success with this program where realtors just love it because they know what's going on all the time. Loan officers love it because they don't have to call the realtor every 15 minutes to tell them what's going on. And it's been a win-win, and more realtors are giving loans to the borrowers or to the brokers because they can track the system and know what's going on with the loan at all times. Unite is something that's coming soon at UWM, and I just wanted to foreshadow this, which is basically after you close, sending an email to your borrower on your behalf, on behalf of the loan officer and broker shop every 90 days to the borrower with basically a valuation of his house, pulling the AVM in the background, giving information about what his interest rate was, and putting the broker's name and picture in front of him every 90 days. Back to my earlier comment about, they don't remember who you are. Well, if we send that out on your behalf every 90 days, we're giving tools for brokers, and that's what's important, is that in order for us all to grow, because we all win, the consumer wins, the loan officers win, everyone on this call wins when mortgage brokers succeed, and this program, along with a lot of these things, will help with those things. All right, let's talk about the industry. When I was talking to a lot of people when we were growing UWM and trying to figure out, hey, what products are out there, what's happening, what was interesting is Wall Street, investors on Wall Street would say this. They'd say, oh, well, you're wholesale, and it was almost like it was a bad thing because they didn't truly understand it. They bought into the nonsense that we talked earlier about how Jamie Dimon and these big guys want to say all these things that was not really factual. So they don't really know. Well, that's changing. Perceptions are changing. What people are realizing is that mortgage broker business performs just as good, if not better, than a retail business if it's done the right way. There's high-level brokers. A lot of the people that maybe there were some brokers and loan officers that weren't doing things the right way. Absolutely, there was retail lenders that weren't doing the right things the right way also back then. But a lot of those people are out of the business now. With all the regulations, there's really a great crop of mortgage brokers and loan officers in general in the business today. So perception of, oh, if you're retail, you get better product or better options or better things, that's gone. I'm telling you, it used to be, even on MI, on new products, on non-QM products, it's not out there anymore. These investors are saying, gosh, well, wholesale, these guys really run a good, tight shop. This is going good. Brokers can do it this way. They're working with the lender. And the difference is not only is it the originator, the broker, but also a lender. You got two people checking it rather than just the retail lender shop. So the perceptions are changing. There's more options for borrowers. They realize that there's high-quality borrowers and that the brokers are in compliance and doing good things. And when we tried to get ourselves a jumbo product years and years ago, it was like the biggest thing to get over the fact that we were all wholesale. And now it's like it's a non-factor. These guys just come in, they say, hey, we know what wholesale is and we feel good about the wholesale business and we want to continue to grow it. Products. So people used to say I used to be in retail because more products. We talked about this a little bit earlier, but these products weren't available to people that offered wholesale loans before, and now they are. Investor options, 90% jumbo with no MI, interest only, non-warrantable condos. All these products are coming out, and they're going to be great, and some of these are already out actually, but just the point is that Wall Street's no longer scared of the brokers. So that's really what the point I wanted to make with these two slides is don't think that, oh, well, brokers don't have access to as much stuff because it's wholesale, and TPO is like a four-letter word they like to say. That's not the way it is anymore, okay? TPO, third-party originators, they do a great job. And we at UWM, and me personally, are on a mission to make sure that people realize that and know it. And to be honest with you, it's going the right way, and people are starting to realize it and recognize it for mortgage brokers throughout the country. Okay, let's talk about regulatory changes. Every single regulatory change seems like it's gone against the brokers. A lot of people say whatever, that it's not been as good, or these changes are going to hurt the brokers. Well, here, everyone wants to talk about TRID, which is TILA RESPA Integrated Disclosures. It's like all of this basically is TRID, if you hear that word. It's just the GFE and TIL are combined into one document called the loan estimate, and then the TIL and HUD at closing is combined into one document called the closing disclosure. That's all TRID is. It's integrating those disclosures, okay? So don't make it too much on anyone. Now let me tell you a couple things. We all know as mortgage brokers that we have to disclose our compensation, where retail lenders can be making more and don't have to disclose it. And it's kind of an unfair playing field, as we all know. And although the block A on the GFE, the adjusted origination would be the same, but we have to disclose on block 1 of the GFE the overall fees. Well, with this new TRID changes, mortgage brokers no longer have to disclose the lender-paid compensation on their loan. So this is a big win for mortgage brokers. Actually, the NAMB, John Councilman, and the team over there did a good job pushing this for brokers, is that, lender-paid compensation is not going to be in the new TRID docs that has to be disclosed for borrowers. So therefore, a retail GFE compared to a wholesale GFE, or a retail loan estimate versus a wholesale loan estimate, is not going to have any differences if it's lender-paid comp. It's not going to have an extra $4,000 fee, and then we have to explain, oh no, that fee's really not me. The lender's paying me that. It's separate. That's no longer going to have to be that disclosure or that discussion. So that's a very positive change for brokers, where I think that a lot of people think that, that always are negative things for the brokers, and this is one that actually is hopefully leveling the playing field a little bit more. And I see some questions coming in. Sorry, just keep emailing at questions@uwm.com. We have a handful more slides, and we'll get to all these questions. I see some really good questions that have popped in the inbox, so I'm going to make sure I get to all of these today. Closing disclosure. Here's another thing for you guys. Everyone's talking about on the closing disclosure that, you know, I even saw an article yesterday about it. It's just funny. So don't let people get you all hyped up and thinking about things. There's an article yesterday that, oh, now, you know, you must wait 3 days from the clear to close, or when docs are ready to close the loan. And if the loan amount changes, then you got to wait 3 more days. That's not what's happening at all. So let's make sure we're clear on it. The closing disclosure, like I said before, is the TIL and the HUD combining the one document. So when do we have to disclose? So you have to wait 3 days. So what's going to happen, and here's another advantage of being a broker, is what's going to happen is when the loans, you don't have to wait till it's clear to close to issue the closing disclosure. What you're going to do is you're going to issue it once the appraisal's probably signed off, when most of the conditions are clear. And that's when your 3-day clock starts. You only have to redisclose and wait 3 more days if the APR changes by more than an eighth, which we already have to follow that rule, if you add a prepayment penalty, or the loan program changes. Those are the only 3 reasons that you got to wait 3 more days. So prepayment penalties are extinct, hopefully. Hopefully nobody's doing loans like that. APR, we already follow that rule. And a program change, if the program is changing from conventional to FHA, well, yes, it probably is going to take more than 3 days anyway, so I wouldn't worry about that. So it's not this thing that's going to slow down all of closings and the whole business is going to slow down. This stuff starts August 1st, and it's not that big of a deal. Now, the positive is, once again, different people interpret the laws different ways. So benefit of being a mortgage broker is you're going to have 150, 200 wholesale lenders. They're all going to interpret them slightly different, and you're going to be able to make sure you know what the rules are and work with the lenders that are most aligned with what you believe. If you're in retail, there's only one way you're going to follow it. That's the retail lender's interpretation of it. And some people interpret things differently, positively or negatively. Sometimes they're wrong, too aggressive, or sometimes they're wrong, too tight. So just understand these regulatory changes are coming. They're not that big of a deal. They're actually positive, in my opinion. You're taking 2 disclosures, turning them into 1, and there's some positive things for mortgage brokers. One other thing, licensing. Right now, banks and credit union loan officers don't have to be licensed. It's ridiculous. We all know that in the business. I mean, how silly is it that all the things that we have to go through to get licensed, testing and passing all these things, and if I worked at a bank, I wouldn't have to do any of that stuff. That's ridiculous. I'm still talking to the borrower the same way. I still have to know the rules the same way. Why wouldn't a loan officer have to know that at a bank or credit union? Well, that's going to be changing soon. They're working on this. It's not done yet, but I see that changing soon, and we've talked to some different people that say it's in the works, and they're already doing it. You know, it's obviously a lot easier now with some of the states that require, you know, you can get a lot of states with one test. There's some different things that are making it easier, but it's going to happen. And then there's going to be no reason to ever be at a bank or credit union unless it's the best place for you. And by the way, I'm sure it can be, but it's not because I can't get licensed, or I don't know how to, I don't want to pass the test, so I'm going to stay there. So licensing will level the playing field, which will be positive. And once this happens, it's going to be floodgates open to mortgage brokers. All those people, all those loan officers that you talk to, that you guys know, if you're a broker shop owner, oh, well, my buddy Steve's over at XYZ Bank. He doesn't want to go through the process of licensing and testing. Well, as soon as that hurdle's gone, it's going to open up the floodgates more for mortgage brokers. So all these things are positive, and all the arrows point towards mortgage brokers growing. And for mortgage brokers to grow from 10% to 12 to 15%, we can do this together as a team. You know, so we see this happening, and maybe it won't get to 30% like it was a couple years ago, but it's going to continue to grow. So the future of wholesale we look at is the market share is going to continue to grow. It's the best place for a consumer to go to get a loan, and it's the best place for a loan officer to go. And it's a combination of those two things. We really believe in it. And then we as in you, everyone on this call, and me, we have to stay true to insisting upon that we can help each other grow. So wholesale lenders have to help mortgage brokers grow. Mortgage brokers have to help wholesale lenders grow, and not compete with one another. We're all on the same team, not on the same team today, and then after the loan closes, I'm on a different team because I'm competing with you. And we have to insist upon that. And the more we do that together, and the more we work together as partners, then mortgage brokers will continue to grow. Wholesale lenders will continue to grow. So everyone wins at the end of the day, rather than making a competition for those loans that the broker brought into us. So we're going to see mortgage brokers grow, hopefully we can help out with that. I'm doing a lot of stuff nationally. You can probably tell that I'm passionate about this, to help advocate for mortgage brokers, make sure that people on the major news media know about that the mortgage broker is the best place. And as we continue to help push that message, hopefully more and more mortgage brokers will do more and more loans. And UWM, if we do a heck of a job, we'll earn that business from you guys. So I see a lot of questions in, and I actually tried to go through this a little faster. I apologize. I know I talk fast, but I wanted to go through it fast so that I can take some of these questions, because there's a lot of really pointed questions that I was reading as I was talking, and so I want to make sure that I answer them. So, you know, email questions at UWM. Also, if you want the copy of the webinar, if you email questions, we'll send it right over to you, questions@uwm.com. But Christina from my office is gonna read some of these questions off, and we're going to try to answer a lot of these in the next 15, 20 minutes and really answer them, because a lot of them maybe reiterate some of the points or maybe make it so I can be more clear, because I know I talk a little bit fast. So Christina, go ahead.
Okay, the first one is Rick from California. I'm leaving the mortgage banker big company platform and joining an independent broker. How can I sell that to my real estate agents?
That's a good question. So a lot of times people think that real estate agents don't want you to be at a broker shop. They want you to be at a lending institution that can give a pre-approval letter on their letterhead, and that's just not the case. I'd explain exactly what we just talked about today, which is about how it's the best option for the borrowers. I have more lending options rather than just one set of underwriting turn times and one set of products and one set of pricing. I have 200 set of turn times, 200 sets of products, 200 sets of pricing, and I can find the best deal. That way, as a real estate agent, you care that I get the loan closed. I will never miss a contract date if I have more control. I can't be a finger pointer and blame my retailer. I can control it now because I have more and more options, and I know which wholesale lenders are the best. So it's easy, and it's actually, I think you're going to get the reverse. I think they'll be happy if you told them, because I think that they real estate agents, which was the article I read earlier, are the ones that talk about it the most, that mortgage brokers are the best place to go.
Okay, the next one is Michael from California. As a broker, does CFPB allow us to establish different comp plans for each lender we use, or does lender comp remain the same across the board?
Well, so it's a good question, Michael. So I guess the way I think about things is this. The purpose of the law on the comp plans was that, hey, listen, when you originate a loan, you want to give the borrower the same, you want to make the same amount of money on every single deal. So you're not making more because I sell it to X lender or more because I sell it to Y lender. It's about being consistent and making the same amount of money. Say, hey, you do a loan, you're making your comp plan's 2 points. You're going to make 2 points wherever you set it. Now you're going to find what's best for the borrower. And so that's how I believe it. I think there's some more interpretation that can be a little bit more gray, that you can have different compensations packages for different lenders, and that's okay. I think that's actually within the law, as long as the loan officer himself or herself makes the same on every single deal. I think you're in compliance with that, but I would check with your compliance people to make sure that they feel good about it. But in general, the whole point of the law is, hey, when you get a borrower to come to you, regardless of what lender you send it to, regardless of what product you put them in, FHA, conventional, or jumbo, or whatever the product is, you make the same amount of money or as a percentage of the loan either way, and that's what the law that they pushed out is really supposed to mean.
The next one is David from Alabama. I recently ran into a situation where one of my lenders refinanced my borrower through their retail channel and then sent me a bill for an early payoff. I don't feel that's fair for me to have to pay this. How would you suggest handling this situation, and do I have the right to refuse to pay a fee?
Yeah, David, thanks for the question. So it's funny, I laugh a little bit because we've been in business 29 years here, and we were a mortgage broker as well, growing and I remember this exact situation. I can say the company's name because they're no longer in business, so I don't feel like it's saying anything negative. We had this exact same situation happen with Countrywide, and it was, I was doing the loan, or excuse me, we were doing the loan, and they refinanced it, and then sent me the early payoff. And I said, wait a minute, guys, you're the ones that did it. Well, you have to prove to us that we are the ones that solicited them. They went through this whole process. That's not how you do business. So first off, yes, I would fight that, and I would not pay an early payoff if that same lender did the loan. That's just not good business. And second, I wouldn't work with lenders that do that. You know, besides that, I wouldn't work with a lender that refis my clients. But let's say, besides that, they refi their clients and then they have the audacity to email you an early payoff. That's not good business. There's no other industry in the world that would allow that to happen. And that's what I'm trying to get out there to people is that doesn't happen in any other industry. A lot of industries have broker models, but no one allows that. You don't compete with the broker. You don't try to take their business. They're the ones that are feeding you the business. So I would, support you not paying that. But I mean, I would read your contract. But I wouldn't work with that lender. I think you can control that by not working with lenders that do that, because that's not good for you or good for the business.
Next is Mark from Tennessee. Tips for setting up a compliant broker shop. I'm interested in starting back up my own shop, but I'm not sure where to start with all of the new compliance and regulations.
Yeah, no, that's a good question. So it's obviously got to be compliant. So, I look at it as a positive. There's a lot of compliant rules out there because, it makes it hard for other people to join our industry. But if you're in the business, you're already licensed as a loan officer, you want to start your own broker shop, you definitely can get involved with it. Like I said, we have that broker in a box process that kind of helps you go through all the hurdles. We also have on our website all 50 states, like disclosures and compliance rules in all 50 states, which maybe can help you get yourself started. We'd be happy to help you out with that. If you want to talk to your account executive, we have a guy here, one of the VPs here that actually helps run this process. But we'd be happy to help out with it, but it's not as hard as you think. So don't let that be the barrier, like, oh, I'm really busy, I don't want to do it right now. I'm telling you, it's much easier than you think. We can even connect you to some people that have done it and see what hurdles they've done. Obviously, each state's different, whether you're in Michigan, Oregon, Indiana, Alabama. Every state's a little different, but we'd be happy to help connect you to someone that just did it and help make that a smooth transition for you.
The next one is Brad from California. In your opinion, what are the upsides of being a broker versus an originator for a direct lender?
Well, Brad, I think I answered a lot of this, and I'll kind of just reiterate the main points. But my main thing is this: is that it's flexibility, it's options. Okay, if you're working for a retail lender, you have one set of products, one set of turn times, one set of pricing. When you're working for a wholesale, working for a broker, you have all the wholesale lenders at your disposal. So not that you're never sign up with 200, but even if you have 5 or 7, that's 5 times the turn time options, 5 times the product options, 5 times the pricing options. You guys all know sometimes a lender like us may be real sharp on a conventional 30-year fix and then not as sharp on an FHA 15-year. Okay, well, lender B over there is really sharp on FHA 15 years. Today, get my FHA 15 years. UWM gets my conventionals, right? So you know that. Where if you work at a retail direct originator, you only get the one secondary marketing team. You only get one team's pricing thoughts, one team's turn times. If you get backed up, 4 underwriters quit or 4 underwriters are out sick, guess what? Your turn times get backed up at a retail lender. Wholesale, you know that. They're posted, and you find a lender that can get things done for you in 2 days on the new underwrite or 1 day on conditions. So more flexibility. I'm all about options. I want to have more options, more opportunities so that I can control my own destiny rather than, oh, I'm a victim of whatever my retail owner of the company decides to do. They fired this underwriter. The closures are off this week. I don't know what it is, right? So you have more control when you're a mortgage broker.
The next one is Danielle from Texas. As a broker owner, I'd like to know what points you would sell if you were trying to recruit originators to join my shop.
Well, same things. It's the same stuff. It's all about the flexibility and the options. So I wouldn't sell anything different besides that. And there is no negative. So it's interesting. People say, well, you got to disclose your compensation on the good faith. Well, guess what? That's going away in August. So give me a negative. I'm going to ask you the question back. What's the reason I want to stay at a retail lender that I couldn't broker? Now, because I don't have to disclose it on the GFE and I don't have to disclose it on the HUD, the compensation. Okay, if that's the biggest one you got and that's the biggest benefit you got, then I question if the positives outweigh the negatives of working at a broker shop.
The next one is Angela from Virginia. I've been a retail loan officer for a long time, and I just recently entered the wholesale channel. I find that I'm overwhelmed when it comes to choosing the lender that is best for each situation. What are some tips to narrowing down which lenders are best to use? Yeah,
Angela, that's a good question. Yeah, I think you got to get used to, you got to learn your lenders, and that's a learning curve. The way I always think about it, I always ask a wholesale lender, so what's your sweet spot? What are you guys best at? And you'll find out. You'll find out that if you found at UWM, you find out that we're best at conventionals, we're best at purchases and MI. You ask someone else about another company, they might be best at FHAs, or they might be best at USDA is really our sweet spot. Or hey, if you got a loan under 640, that's really what we're good at over here at XYZ company. I'd ask your top 5 reps and ask them what they're best at, and then I start slotting them in there. And then you try them on those loans, and if it doesn't work, well, then they get removed from that slot and you find someone else. I think it's a little bit of a learning curve, but I think that after 3 to 6 months of doing that, you'll find your bread and butter and your sweet spot with each lender. Hey, I know if I get a conventional 30-year, I know I'm going to UWM. I know if I get a FHA 20-year, I know I'm going to XYZ lender. You know who you're going to. based on your experience. So I would ask the AEs, and if an AE says we're good at everything, that's a good telltale sign to not work with them, because and hopefully if our ADs say that hey, we do everything, every loan, well, that's not who we are either. Every lender's great at some things, and every lender's good at some things and not as good at some things. And so that's a first step to find out what kind of rep you're working with, is that they can tell you what they're really great at and what type of loans to send you.
The next is Jim from Michigan. Do you see more brokers working towards adding warehouse lines as part of their growth plan?
Yeah, Jim, I see some people doing that. I think it's a good opportunity. I think it's, it actually eliminates the one negative. We tried to talk about a couple of questions about being a mortgage, about buying, be at a retail spot. If I had a warehouse line, I could close in my own name, and fund myself. So, I see more and more people doing that. As long as they're doing it for the right reasons, and it's not to try to avoid a 3% cap, which I don't think many people are doing. I think more people are doing it because they want to have flexibility. Back to the options. I'd rather have options of doing it on our correspondent line or not, rather than just having one option. So we do see that happening, but we don't see it as a widespread as maybe you would have seen it 12 to 18 months ago when people were worried about some rules or what were going to happen with mortgage brokers. Because now, not that all the regulation is behind us, but the majority of it is kind of everyone knows what's what now, and the mortgage business is coming back, and it's interesting to see that there's probably less of that happening now, but it still happens.
The next is from Jim from Florida. Do you think the CFPB will start coming down on brokers and lenders who utilize the mini correspondent programs as it's being speculated?
Jim, just like the last question, I would say if they're using the correspondent line just to get around the 3% cap, well then yes, I think that will come down on them. But I don't think many brokers are doing that. I think mortgage brokers are doing it for other different reasons, and if they're kind of expanding themselves and, hey, listen, let's take it to the next level and do our closing docs and, have a little bigger QC shop and have a little bigger compliance team. I mean, it's just a next step for people in an evolution. If they're doing it for the right reasons, it's not a big deal. If they're doing it to just kind of avoid it, and I think the CFPB came out and gave some guidance about a year ago to make it so that people are doing it for the right reasons, and I think for the most part people are.
The next one is Kelsey from Florida. With wholesale being able to offer more and more products for borrowers, how can we get this information to real estate agents to let them know we are the best choice?
Kelsey, the way to do that is by doing a heck of a job every single time and spreading that news one person at a time. I think that it's happening, and I think, like I said, it's slowly getting out there. How do we get it out there more? I'm going to be helping. I know hopefully every person on this call can help, and every person that we work with at UWML, our brokers, can help. We want to get that message out there because at the end of the day, it's true. It's not, that's what the hardest part about this whole thing is the facts are that brokers are the best place for the real estate agents. The facts, these are the facts, right? These aren't an opinion of someone. It's not, and so, but the problem is all the marketing money and all the dollars behind these larger players pushing them that way, pushing them away from the mortgage brokers is much more substantial than one-on-one talks. So how do we get that message out? How do you get that message out? I think it's a great question. I'm happy to help in any way. But if you do a heck of a job with a real estate agent, close your loans, then continue to do a consistent, great job, and then continue to expand that, and you'll grow your business in that neighborhood. And if other mortgage brokers are doing the same thing, we will slowly but surely continue to take more and more market share. But the fact that the overall market is only 10% mortgage brokers, but 20% of the overall market is purchased, is done by mortgage brokers, it shows that real estate agents and already see that a little bit, and we got to just keep pushing that and keep pushing that.
Next one is Damon from Texas. How will the new 3-day rule affect your operations and my borrowers being able to close timely?
Yeah, so Damon, we talked about already. I mean, it's not going to affect it very much. Once again, if the APR goes up or down, if a prepayment penalty is added, or if you change the loan programs, you've got to restart the 3-day clock. But the closing disclosure is going to be issued by the lender to the title company more than 3 days prior to consummation of the closing. So as long as you're not waiting for a clear to close to send out the closing disclosure, you're not going to be delayed. If you do wait for the clear to close, well, that's going to be a problem. So a loan amount changing by $100 is not a reason to have to wait 3 more days. So getting the closing disclosure out there to the borrower when all the final terms and things are set is important. And if you can do that, you're going to be really successful. And I think a lot of retail players are not going to be doing it as efficiently as a lot of wholesale lenders. So hopefully that'll give us mortgage brokers a heads up and a little competitive advantage when these new rules come out.
Matt, are you okay taking a few more?
Yeah, let's take a couple more, and then we'll answer the rest via email and follow up with everybody.
Great. The next one is Ed from Texas. How will regulatory changes relieve brokers from the compliance headaches, which is most of the reason why they join larger retail banks and correspondents?
Well, Ed, I don't see that any change are going to relieve brokers of compliance headaches. You know, the truth of it is, we're in a regulated business, and that's the way it's going to be. And I take a positive perspective on it. That's the way it's going to be. The thing is, we're helping a borrower get financing on their biggest asset of their life. The biggest thing going on is buying a $200,000 house, a big deal for everyone. So there's going to be a lot of disclosure. There's going to be a lot of compliance to make sure that everyone's disclosed properly. But if you do what's right all the time and you know the rules, you're always going to be okay with things. So make sure that it's not – people ran to banks because they didn't want to have to deal with this stuff. But the truth of the matter is, to have more options and be able to get more business, to make more money as a loan officer, at a mortgage broker shop, I'll take the time to learn a little bit about the laws rather than just kind of rely on the retail lender, the big bank, to just tell me what the rules are and I just got to follow them. Because quite honestly, they're not in the weeds of the business like you guys are, and a lot of times they make the wrong decisions, which actually impacts you getting less business. So in the new world today, we got to just embrace the embrace the compliance, just learn the rules, and do a heck of a job of it. And once you do, it's really not that complicated. It's really not that hard. And I think a lot of our mortgage brokers that we work with, and a lot of probably others on this phone call, are probably excelling with these once you understand the rules and understand the laws and just do a great job with it.
Okay, Russell from Ohio. What is the best strategy to develop relationships with realtors that already have a preferred broker?
Well, Russell, I mean, the way you got to earn business with anybody that's already working with them, we work with that right now at UWM always. Our AEs will call on a broker that already has a lender that they work with. So you got to slowly but surely earn your business. So if you got a real estate agent that works with a preferred lender or a broker already, you gotta slowly show them what you can do and why you can excel. And it doesn't happen overnight. No business-to-business relationship changes in a month or even 3 months or even sometimes 6 months. It takes a long time of consistently being in front of someone until that opportunity comes up. And when that opportunity is there, you got to seize it. So don't think that you're going to go and, oh, this guy works with ABC broker all the time or ABC lender all the time. He sends them all his business, and I'm going to come in and give him a card and tell him I can do the loan. Well, he's not going to send you his loan. He already has a relationship there. You got to slowly earn that business. So don't be too quick to think it's going to happen in a week or a month or even sometimes 6 months. I've found that the longer it takes to get into some of these real estate agent shops, the better the relationship's going to be, because no one else is going to work as hard as I am by waiting 6, 9, 12 months of working this guy to get him to give me some business. So, don't think it's going to happen overnight. Nothing happens overnight. Nothing worth a lot happens that quickly. So it takes time. You got to build it slowly but surely. So I think that's it for the questions today. I want to turn it back over to Beverly, but I want to thank, National Mortgage Professionals does such a great job. Make sure we're supporting them. They always are trying to help us in the industry, not to help us as in UWM, but help us as in brokers and lenders alike. They do a great job, always talking positively. Beverly, anything else you'd like to add before we close down the webinar?
No, just want to thank you, Matt, for another great webinar, a lot of great information. I'm actually seeing a lot of questions come in on the GoToWebinar console as well, so we'll be sending those over to you to get someone at UWM to answer. And thank you so much again for a great presentation.
Great. Well, thank you guys very much. Have a wonderful day.